Welcome to Java. Thank you kindly for joining me. It's October 11th, 2024. It is also Friday, so we are looking forward to a weekend after a crazy week of flooding that is with currency as well as flooding from hurricanes and some extreme weather events. So, along with this, let's go ahead and get started with what we expect this morning in the markets. We've already got some movement going on. So, with this, favored risk indicators still moving a bit higher, although slowly in measured moves. So 261.5 on the MMRI, watching the 10-year yield and relative strength of the dollar. Now, the interesting part is that the 10-year yield is strengthening a bit, but the relative strength of the dollar is not. Now, looking between the two, part of this is because there is another currency war, currency trade going on, namely China. So we will talk about this in just a moment. At the moment, we're talking about the feared greed meter still in solid greed territory, however, retracing. Was 74 just a couple of days ago, and now we're down below the 70 marker at 69. So there's a few people closing out, pulling back a bit, a little bit more fear coming into this market. I expect that to continue through today. Being Friday, a couple of reasons for that, pulling profits prior to the weekend, as well as escalating tension in the Middle East. Now, with this Middle East issues, we've got oil falling while traders are waiting an Israeli strike and the China stimulus. Now, the China stimulus is the currency war that I'm speaking of. And as they're planning on boosting their markets in additional billions of dollars, that will basically put pressure on the United States stock market. So we'll probably see this upon opening. We've got right now cryptocurrencies are going higher after the dip yesterday. So if you didn't buy the dip, that might have been the opportunity. We'll have to see where it closes today. There is a probably 50-50 chance it could go lower from here. If it does, it could hit the 50s. So we'll see. This is not financial advice, but it could also just strengthen from here. We'll see. So with the sentiment right now, we've got precious metals and oils rising. And then this headline actually summed it up quite well. We had the S&P pull back from a record high as the inflation data yesterday hit investor optimism. So we got fear index remaining in the greed zone, as we just spoke about. Now, this morning, prior to market open, we're getting earnings and forward guidance from mostly banks. So we're watching JP Morgan, we've got Wells Fargo, BlackRock, BNY. They've got Fastenal in here in Bank at 7, but the others are the ones we're mainly watching. So what are we watching as far as early indicators? We've got stocks looking weak on the closing yesterday and moving in. Volatility index increasing, our fear index. We've got gold increasing, which is also a fear trade. Oil was down. I expect it to rise if the tensions rise in the Middle East. This is always worry on production. The futures down here are saying there's basically a little bit more weakness, slight, but more weakness to look forward to as the day goes on. For the markets, we've got gold and silver futures up. So this is kind of speaking to mild fear trades. So as long as nothing major goes on, we're just going to watch for a continuation in the weakness that really started yesterday. So with this, taking a look at the calendar that we've got going on today, we're getting PPI, core PPI. This is from the producer side. So basically the inflation going forward for businesses and factories, what they're going to have to pay. We've got Fed presidents coming out to speak as usual. They can kind of guide the market back if needed. Now, I've left this up here again. This is the second meeting of BRICS ministers of finance happening today, along with the central bank governors over there. And we'll talk about that a little bit more because there's a few things that have been coming out from it. Now, they haven't made their huge announcement yet. They won't until the end. but they have been speaking about some things coming out. With this, we've got the United States Federal Reserve Goolsbee saying that there's lots of progress being made on inflation as well as the labor market. Now, this isn't exactly true. Basically, what's going is inflation is continuing and the labor market is getting weaker. If you look into the numbers, there's more part-time jobs, less full-time jobs, more government sector jobs, which are not private market, that feed the economy. So this means we are heading into the dreaded stagflation. And stagflation, just as a reminder, is when inflation is continuing to increase as the real economy is declining. So we are hitting that period. It's been quite some time since we've been in it, but it is beginning, and it probably won't accelerate until after elections. They're getting quite close. So with this, a little bit more about banks. Now, this is TD. They are a Canadian bank, but they are leaving certain United States businesses. They got hit with a huge anti-money laundering settlement fine. So with this, they've got to basically resettle, closing out some of the businesses and going to lean back into Canadian territory where they've got some assets. Couple of single issues I'd like to bring up. The first one is Stellantis. They basically fired their CFO, Chief Financial Officer, and a couple of other top execs. They are buckling down, looking deeper into their business model. And this is kind of an elevation of what we had spoken about before. When you see the job market weakening, first goes on lower end, then to middle management. Now, of late, we're watching multiple top-end CFOs, CEOs, all turning over. This is where we're finally hitting probably mid-break, is what I would say, in the unemployment. So probably doubling from here as a rough estimate. So with this, I'd also like to bring up homeowners haven't drained cash out of their houses this fast since 2008. What are they speaking about? When the mortgage rates dropped, they saw more of a move in refinance, not so much purchasing. This is indicating major trouble on the horizon for the housing market. Now it is local. So, for instance, going to watch probably much more issues in Florida, particularly after these storms. They could have serious deflation in their prices quite quickly, as opposed to some other areas in the country. I'd like to jump over and speak about the BRICS nations. Again, they did have their meeting basically today. They're talking about expanding the use of national currencies, doing direct trade through a new financial platform that Russia has set up in coalition with China. So the two together have built this financial platform. They're inviting the others in. Now they've got over 30 countries now that want to be in the BRICS platform, with more applying every day. Russia is the current basically chair, so it's being held in Kazan at this moment. And if you put the conglomerate together, the BRICS nations as they are currently, not the new applications, are set for a 4.4% growth. 2024 to 2025, they are now outpacing the G7 economies. So, not something to bypass, basically. They'll be looking at a singular currency. They're not there yet, but they are looking forward to that. With this, we've got SWIFT, which is the Western rails, if you will, to pilot a digital asset and currency transactions in 2025. So they are looking at accelerating because they see what's going on the other side. This is basically, with the increasing inflation, the devaluation of the US dollar, it is basically rapidly accelerating the death of the US dollar. While it's not here yet, it is in the making. So with this, what will replace this is Ripple. They're launching a cryptocurrency storage for banks. So Ripple expanding. We've got Ripple networks, basically. So, and then the token is XRP. So there is a distinguishing factor between the two. However, they're for a long time here going to work hand in hand. So keep an eye on that. We've also got the SEC now boldly admitting that their crypto approach has been a quote disaster for the whole industry. So they're finally admitting that their chokehold really wasn't a good idea. Couple of other things I would like to go over prior to letting you go. These are not directly related to the market, but the US Agriculture Department has now approved blockchain-based certification system. Basically, tokenization of all agricultural products. They've got cattle proofs, basically cow NFTs, have officially become a part of the USDA's record. Now, how are they using these? Basically, like ear tags for cattle. However, this is the life of the animal, the product, whatever it might be. NFT would include all of their vaccines, health histories, as well as how they go to market and what process they go through. So with this, and also kind of a collaborative story here, butter being made from CO2 coming as a startup chases new fat sources. Now, we all know that after our food supply, they're looking to basically decrease the amount of meat naturally occurring that is made and put to market. And now with this tracking system in convergence with looking at these chemical and alternate methods that they want to replace our food with is not a good thing. So a little bit deeper into the physical war going on, Iran has said that they will retaliate against Israeli attack on their energy sector. Now, this is a large part of what is affecting the price of oil, but they have also said that they would basically retaliate against any countries that are allowing the Israelis to use either their airspace or help them with weaponry. Now, this encompasses quite a few countries, including Saudi. So this is widening the war, if you will. So that is a concern. We'll have to watch that over this weekend. There is possibility for false flag coming up. The danger is increasing. The escalation is rapidly rising. So that is a definite concern on the horizon. And with this, at the base of what is causing all of this is we've got Jeffrey Sachs. He's basically an American economist saying that the US dollar has become an instrument of an aggressive form of policy. And basically, the US weaponizing the dollar is at the base of all of this aggression, the basics for the currency wars, and all of the trade gone wrong. So, with all of this, we've got a very interesting couple of weeks ahead. So, with this, I just want to remind you attempt to preserve your freedom is of utmost importance, preserving privacy, freedom of speech, and a freedom to move about. So, with that, I wish you all a great day. And until I see you again, I hope you maintain your freedoms.